Well, good day. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for Monday, the 4th of December, 2023, about 6:53 p.m. Central Time. Correction. Yes, that's what hit the marketplace, finally. Now, December 1st, the seasonality ended in the Dow. December 2nd, sometimes it's on a weekend, so that means Friday, the seasonality to the upside in the S&P runs out, and the NASDAQ is, I don't mind telling you, December 8th. Now, because you run out of the seasonal uptrend does not mean, N-O-T, does not mean the market has to go from bull to bear. It means that historically, the patterns that kick a market have run themselves out. I have told you that what I thought would happen is they would run out. You heard me say that. We'd churn, and then we'd get a Santa Claus rally at the end of the month. I still think that. I said this, though, back in September. Do you remember the first report I did? Then I did a backup. I said October would be a terrible month. It was. And November is normally an up month. It was. And December at the beginning starts in a churn. Doesn't mean I'm right. I happen to be, but I'm lucky to be right, okay? It doesn't work every year that way, or does it? Well, let me think about that. November's worked 16 out of 16 years that way. So historically, it's done that. Does it mean it's going to go 17 out of 17? No. Listen to what I just said. No. Nobody knows. Past performance has great limitations, all right? It's what happened, not what's going to happen. But when you add the chart action to it and others, you're always looking at it as a tool, not the tool. Can I be any clearer to everybody? Please understand that. So as you and I come and we look at the S&Ps on the weekly, on the charts, you're over the 18-week average, so you have an upside bias automatically. Do you disagree that the market's got distribution? Now, you do remember me saying to you, trade top, ahead, the other shoulder. So left shoulder, right shoulder, but you're going to flip them over. You're going to go this way. So this will be the left, believe me. That'll be your head. And when you do it, the 4650, 4700 zone, I've said it over and over, could be a target. I don't think we're too far away. We got to 4600. So if I'm wrong, I'm wrong. I'm close. That's what I care about. Now, what's happening? Distribution. You got it. This is a distribution pattern. Get used to it. Are you trending? No. You suddenly have a higher high and a lower low on that pattern. You don't have a pattern that makes any sense to trade right here. So now if you're in the market, the question is, what do you do with that long? If you're holding on for the very end, you're thinking you're going to get another rally into your end. But what pain do you take in the meantime? Let's talk about that. You could easily be back before you know it to the 18-day average to grab for favor in the market. In other words, support. Where's the resistance? You haven't hit it. This is a hard market. When I told clients to start buying the markets, and I did some back here, we had talked about it here, I said, you got to trade small now because everybody's one-sided in this trade. It's called crowded. When you get crowded trades, the market has a tendency, like it did in the gold market, to knock the people out. Well, that's what's going on here. They're trying to knock the traders out. And that's what I think is actually taking place. Now, you're losing the embedded reading. For my money, probably time to say goodbye to the trade and take another look at everything in a week, 2 weeks, whatever. But if it stays lost, and I don't know at this hour, at now 6:57 p.m., is it going to stay lost or not? I know that it's weakened dramatically, and any close under 79, the market favors that you're going back down. It could even happen tomorrow to wherever the 18-day average is, since it's the closest moving average. You already did it in the NASDAQ. You lost your embedded reading. Not today. I can't get that. I'm sorry. It won't let me do it. It was about 3 days ago, and now you've gotten down there. I mentioned that to you when it was happening. Now the Dow. The Dow is the lone holdout, all right? The lone holdout. I don't know how long it can hold out, but it can. All right? So as long as the embedded reading is in place, the pros are hanging in there. All right? Now, if it starts weakening and pointing down, they may decide to run. Are they buying over the Bollinger Band? No. What are they doing? In my opinion, I wish I could tell you that I know what every professional trader is doing. I don't. But when you hit an upper Bollinger Band, you take money off the table. You don't buy into that band going, it's going to keep going higher. If you do, congratulations. I want to be on the opposite side of practically every trade you make. Why? Because you only stay over that band 5% or under it 5% of the time. So you will get a few streaks where you hit and you run that band. But more times than not, this is going to happen to you. You're going to get your head handed to you. You'll come here. This is the big breakout, Ira. This is it. Boom. That's what I have to say. In the Russell, I wrote this weekend to my traders that because I'm now expecting the S&P, the Dow, and the NASDAQ to churn, that this market can come alive. It's like money moving from the left hand to the right hand. Now everybody's going to say, nothing has changed. The Fed's going to cut rates in March. If it's not March, it'll be in the second quarter of the year. The economy's going to be just fine. It'll churn. Well, number one, I don't know that it's going to be able to duplicate this year's results. That's just my guess, okay? It's been a heck of a nice year, in a year that very few pros got it right. That's what I believe. Go back to January predictions. How many of them were wrong? I hope you do that for yourself. I don't even read them anymore. I truly don't read them. And I read more than probably anybody you've run into. And the reason is they're not worth the paper they're written on. All the reasons make no sense. None of that ties together. So then I take a look at the 10-year note. Well, I like the notes and I like the bonds. They're still embedded. On pullbacks, I think the pros are trying to nibble into them. But if they lose the embedded reading, and they're starting to point where they can, just getting back to today's lows can make them lose the reading. You got to be cautious now. Now it's time you put your hands in your pocket, very possibly, and you go, let me take a look for a little bit. This could be where I got to sit back. The dollar acts like short covering. Could get up to the 18, to the green line, the 100-day average, and fight a battle to determine what it is. What it is screaming is you can't be short anymore. You lost the bearish embedded reading. So long to the bear side for the near term. In the euro, it's the flip-flop. You lost the bullish reading, you turned down. You should have come into these moving averages, and it's exactly what you did. In the British pound, you are flirting with losing the embedded reading. It's probably time to say goodbye to this trade as well. Okay, so there's a number of trades here that, for my money tonight, I'd want to tell my clients, go to the sidelines, take another look at things. We'll look at them in a day or two, maybe a week or two. Right here, they seem to be losing momentum. Bitcoin, I mentioned to you. First off, I'd never tell you to buy over a Bollinger Band, so when I was saying it, well, you were in here. And I said, listen to what's going to happen. The chart action isn't going to help you. This is about not saying you're a trader. This is about deciding that if you're going to buy long, you're an investor. Go back to last week's videos, not weeks ago, and this is exactly what I was saying. So the chart action isn't it. If you're playing for the ETF, it's the only way to do it. And trade small, but understand you're probably going to 42 to 45,000. Take a look at what I said. I'll stand behind it. You're at 42,575 right now? Come on, I feel good about that. Now in the energies, okay, I don't believe OPEC. I've said that to you when they did it. I realize every cut they say is a voluntary cut. That's their modus of operandi. When they do things, what they'll tell you, people, this is just how they do it. All the members are unanimous in their voluntary moves. In other words, you can't put a gun to their head. And if somebody says no, they voluntarily said no. You do understand. Guyana said no. Brazil cleaned up its act this week. So Lula comes out and says, yes, we want to be with OPEC. We're going there as observers. We don't see the need to join and become under quotas in any manner. This is this weekend. So there you go. Another thing that happened. Our brilliant president, Biden, who has no idea about an energy policy. The man's, honest to God, I think he's in the 1910s. This weekend, I'm reading an article. They have decided again that it's time to buy crude for the strategic reserve. Did the market go up on the news? No. Nobody believes them anymore. Nobody believes we have an energy policy. And I think if you're like me, you believe nobody's behind the wheel. This thing's driving itself. The oil companies are doing what the oil companies do. Instead of him doing it where he said originally, which was right, I applauded him. I go back to the tapes. Said, I think he's got it right. He started, I think it was 72 or 70 down to 67 was his goal, to be buying a lot of this. He bought not one barrel. He and his brainstorm energy secretary came out and decided after they made the statement in October that after the elections, we can't buy any oil. The reserves are under repair. I don't make this stuff up, okay? I laugh at it because he and she, fire them both. That's really what I really believe what I'm saying. When it comes to the U.S. energy policy, there is none. So as I look at what's going on here, I can see it falling back on its own weight. Energy is saying that world economies are weakening, that the money on COVID has been spent and people are now through that money around the world, wherever they were getting COVID relief, they've gone through that. And now high interest rates and the like are starting to wear on things. And the demand for goods has fallen back because the money that was in savings has been spent to a degree too. In other words, we're going still back to a normal time. That's what's taking inflation down. And you have serious amounts of inflation coming down. This is why the Fed, and this is why the market is looking at it and saying the Fed has to start cutting rates to get ahead, not behind the eight ball. They got to get now ahead of things. And that is why the market is building this in. I'm giving you part of what I truly believe. And you see that in the energy market. Now, the beauty of OPEC is they can take oil off the market, and if the other sources that produce can't produce enough, they can create a deficit. It takes a lot of wherewithal of the companies that make it up and the countries to actually follow through. And it has a phenomenal history of cheating. So it's a game of we'll see. Right now, people are going, I don't believe them. I'm in that camp. Will I believe him down the road? I make you a promise I will. There'll be a number where they get their resolve together. That's what history shows of this organization. So you don't fight it forever. You can see in our WTI, we're still producing like there's no tomorrow. And here we are back to 72. So in the Biden administration, from what I understand, you're in the window down to 70 where they want to start buying. Will they? We'll find out. I pray they don't tell us. I pray that after the fact they tell us, because this administration doesn't understand what the Trump did. Trump said the right thing. You don't tell your enemies what you're going to do. You're not telling the world, hey, I'm going to start buying all the oil at $70. There's your floor so it never gets under it. Shut up. Let the market come to you. Let your actions in the market take care of it. Then you get over to the heating oil. How warm is it where you live? We're going to get some snow supposedly tonight in Chicago. And then, I swear to you, on Wednesday, 50, 56 possibly on Thursday. We're in December. We are not having a winter. We didn't have much of a winter last year. When's the last time you had an inch of snowfall in New York City? Go back, put it in Google tonight. An inch of snowfall or more. You're going to be surprised. Then we come to natural gas. Well, this is the problem. I'm not burning the gas I should be burning. I should be 20 degrees right now at nighttime, maybe near 40 during the day and burning away, not 50s. So yes, I have to have the heat on, but I'm not burning as much. So you put it together, that's your game plan. You have one final shot at me. Our Cyber Week sale is on right now. It ends tonight. December 4th, Central Time at midnight. Game over. So if you're looking to take any of these courses for free, All you need to do is go to the website. If you're a new person to us, buy a 1-year subscription to any of my research, any of the programs there. You got it. It's iraepstein.com, the research. The cursor's right here as well. If you're a current subscriber, I've explained over and over last week, step up, increase your subscription, not by adding another year. If you're just, for example, if morning futures, take the full. If you're just morning futures for this, add the spider. If you're both of those, get rid of one and take the full research. There's different variables. I'm not going to go through them all. But this you will not see again at Christmas. Not going to see that. This is your shot. You've got the remaining hours. I'm Ira Epstein. I'll see you tomorrow.